This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Asian stocks poised for a mostly positive open, with gains expected in Tokyo and Hong Kong. US equity futures are also rising as President Trump tries to ease trade concerns. Israel launches strikes in Gaza and suspends all aid shipments after blaming Hamas for an ambush that killed 2 IDF soldiers. And China is preparing to release its third quarter GDP along with September's activity data. SocGen joins us for a preview.
And that concern over trade tensions weighing on the Chinese yuan, not to mention Chinese stocks. We actually saw long-dated government bonds in China rallying on that risk-off sentiment. We will get some more indications of where the Chinese economy could be headed with potential measures out of China's biggest political meeting, the 4th plenum, starting this week. Now, take a look also at how Nikkei futures are setting up, gaining 0.6%. Of course, we have more political news here in Japan as well. We are expecting that parliamentary vote for the next prime minister to come on Tuesday. A couple of markets closed today. We have Singapore, Malaysia away on holidays, but we do have some central bank decisions to watch out for in the rest of the week, including from the Bank of Korea, expected to hold rates steady, while Bank Indonesia is expected to cut. Bell.
Yeah, just picking up what you were saying there about trade, because actually the signs that trade tensions are easing played into the dynamics at the end of last week, because President Trump on Friday said that the much higher tariffs that he was looking to impose on China wouldn't be sustainable. So off that, we actually saw the S&P 500 closing in the green to end the week. And also we had regional banks, that story around regional banks, those concerns around credit cracks, that eased as well with some of the small lenders reporting their earnings. So those two factors together, trade plus the regional bank story, did also play into the commodities pictures, because you see gold and silver as well. But silver really started to retreat quite significantly on Friday, around 6%. But essentially, again, that sort of haven play is very much the big question here. The story for oil is a little bit different. You're seeing Brent crude sort of stabilizing here, but we have just come off 3 straight weeks of losses. So the question is, these concerns that we've seen around that surplus, are these starting to materialize as well, Shery?
Yeah, very interesting, the dynamics that we're seeing in the oil markets, right? Because we saw those prices rising despite the fact that, as you mentioned, we do have those surplus concerns. We continue to watch the credit risks that you mentioned as well. It's interesting to see that the volatility in regional banks has subsided a little bit, perhaps around some of those better than expected earnings that we got on Friday. So we actually saw the broad upside when it comes to U.S. equities. And in fact, this chart showing you that the volatility in regional banks index coming down versus the volatility that we're seeing on the benchmark S&P 500. Now, this is showing you that U.S. futures are rallying back sharply, given, of course, that perhaps more calm returning to the markets. But it's really been about those problems with loans involving fraud allegations and what that could mean for credit markets, right? Take a listen to what Carlyle's Harvey Schwartz had to say about the volatility in credit markets and really what that means for the broader economy.
That data suggests that companies are growing, employment is steady, inflation's a little sticky, but there's nothing in the immediate horizon that suggests that, as you would say, things are crumbling. Having said that, late cycle, it should be on a worry list.
Yeah, so it's interesting that Harvey Schwartz from Carlyle says that the U.S. economy is holding up, because when you took a look at what was happening in the Treasury space last week, it really was those concerns around cracks in the credit story that were playing into it. We haven't really seen too much, or we hadn't really seen too much direction really for a few days, given you've got that U.S. government shutdown ongoing. It's still withholding key data, so it's difficult to have those sort of indicators to drive activity. But it really was the concerns around credit risks that played into it, and we saw yields pulling back across the curve. So it was that haven demand, again, coming back to that same theme, but haven demand was the key driver here. If that has sort of stabilized for now, of course, it's going to be very interesting to watch what happens. Do we start to see a reversal of the trend? But Shery, of course, you're also looking at those big data points for the week ahead as well.
Yeah, it's really interesting that you talk about the U.S. government shutdown, because we're going to forget that that is actually going on, right? No wonder we're getting those haven moves into treasuries, as you mentioned. We do have a few things to keep an eye on for the rest of the week as well. As you mentioned, we do have China GDP numbers out today, activity numbers out today as well. We do have those central bank rate decisions that I mentioned from the Bank of Korea, Bank Indonesia as well. Not to mention, of course, we do have the parliamentary vote for a new prime minister here in Japan also this week. And really, we were watching the U.S. September CPI numbers, but of course, with the ongoing government shutdown, we haven't had a lot of data points to help give us an indication of where the Fed could go from here. And yet we continue to hear more Fed speak. We had the likes of the Fed Governor Christopher Waller talking about lowering interest rates to support the faltering labor market. And we also heard from the St. Louis Fed president as well. Take a listen.
So I could support a path with an additional reduction in the policy rate if there are further risks to the labor market that emerge, and provided that inflation, the risk to persistence of inflation above target is contained, and provided inflation expectations are expected to remain anchored. So that's my kind of overall framework. I do think we need to not be on a preset course.
Well, to our top story now, and Israel has launched strikes against Hamas in Gaza and reportedly suspended all aid shipments. This after accusing the group of an ambush that left 2 Israeli soldiers dead. Israel's blamed Hamas for breaching the ceasefire agreement brokered by the US, as President Trump urges Hamas to disarm.
We're going to find out. So it's not a hard timeline, but it's a line in my own mind. And at a certain point, if they don't do what they're supposed to do, then we'll have to do it for them.
Let's bring in Bloomberg senior editor Wendy Benjaminson with us this morning. So, Wendy, it seems like we knew that this truce or this ceasefire was going to be very fragile, but it seems to be really unraveling even just in the very, very early days.
Well, we will see, as you say, what happens in the next few days. But you're right that Mideast peace may not be as easy as Donald Trump wanted to think it would be in crafting this very impressive peace deal that he crafted. And yet, here we are. Hamas did violate some terms of the ceasefire, but with their earlier last week executions of Palestinians that they considered to be Israeli collaborators. And then, of course, they fired these rockets today that killed 2 Israeli soldiers, prompting once again a very strong Israeli response. So it does seem like the ceasefire could be fragilely, beginning to fall apart, but maybe they'll be able to pull themselves together. We do have a delegation of American officials, Steve Witkoff, Jared Kushner, going to Israel and the Middle East this week to try to hold more talks. Hamas is going to Egypt to have talks. So we'll see if negotiations can pull this all back from the brink.
A fragile situation when it comes to Ukraine and Russia as well. Any progress on that front?
Progress might be an odd word for what's going on. It is certainly 1 step forward, 2 steps back. Another war that will be very difficult to solve. It looked like Trump was going to sell or give the Ukrainian president, Volodymyr Zelensky, some Tomahawk missiles, but then he got on the phone with Putin, the Russian president, who said that he would be happy to at least come to the table and talk peace if they went in agreeing that he would hold on to the Donetsk region. And Zelensky's said, well, let's just stop shooting at each other for a while and come to the table and talk peace, and then we'll talk about, let's just freeze things where they are, and we'll talk about who gets what, if anything. And that is where it stands at the moment. Trump is supposed to meet Putin in Budapest at some point in the next week or so, and we'll see what goes on there. But apparently the meeting between Trump and Zelensky was rather tense.
Rather tense, and I'm seeing as well that Zelensky says he's ready to attend those meetings in Hungary if they do take place. But it seems like the pendulum has again shifted back to the US seeming to sort of prioritize Russia in these talks as well. Do we see any sort of changes to that situation in the near term, or any sort of catalyst for changes as well?
Not at the moment. Zelensky, as far as I understand, is not invited to these talks in Budapest. These are supposed to be bilateral talks between Trump and Putin. And then after that, supposedly, there would be peace talks. This is what was supposed to happen after Trump met with Putin in Alaska earlier this year. And it didn't materialize because Putin had demands that Zelensky couldn't stomach. So, you're right that the pendulum seems to swing back and forth quite a bit. And it often seems to be with the last person Trump spoke to, whether it's Zelensky, he's ready to give him missiles, or Putin, he's ready to give Putin Donetsk. So it's very much up in the air, and we'll just have to see where that goes this week.
Bloomberg senior editor Wendy Benjaminson there with the latest on the geopolitical front. We do have more ahead on the Asia trade. This is Bloomberg.
China will release a slew of economic data later Monday, which could show its third quarter GDP growing at its slowest pace in a year. September's industrial production and retail sales are also expected to show, or confirm rather, slowing momentum just as the Communist Party's four-day meeting gets underway. For more on this, let's bring in Bloomberg executive editor John Liu joining us from Beijing. So, John, thanks so much for your time. And, just talk us through, what are we expecting with this monthly activity data and the GDP figures that are due this morning?
Well, when it comes to GDP, we're expecting slower growth. The expectation is for 4.7%. That's according to the economists that Bloomberg has spoken to. It is slowing because we are also expecting retail sales to come in weaker in September than for the month of August. We're expecting also for weaker industrial output numbers. We're also expecting weaker investment numbers. That added together, even though Chinese exports have been doing quite well this year, we are still expecting all of that to add together to slower growth in the third quarter. But still, the country is supposed to be, should be on pace to meet that about 5% growth target for all of 2025.
John, how important will the fourth plenum be in sort of understanding where the Chinese economy could go from here?
So the fourth plenum will primarily be focused on the next 5-year plan that will run from 2026 through 2030. So it's got a longer term focus. So we're expecting more of an emphasis on consumption relative to investment and exports. That has been the big push by the government. Even for 2025, increasing consumption was the #1 priority in the MPC plan for this year. We are expecting more of that. It's not as clear what we might get in terms of additional stimulus for 2025. But if we are going to get 4.7% GDP growth for the third quarter, and if we're going to look like we're on steady pace to get to about 5% for 2025, that would suggest we are probably not going to get a great deal of additional stimulus.
So, John, on Friday as well, we had President Trump speaking in interviews about the higher tariffs that he's threatened on China, and he said that they're not going to be sustainable. How do you think that's going to be interpreted by Beijing as this plenum kicks off? And as well, they set out these priorities that continue to prioritize their own national security and self-reliancy.
So I think the comment from President Trump would again underline this idea that a lot of what we've seen recently, the threat to put an additional 100% tariffs by the United States on Chinese imports into the U.S., Chinese moves to increase controls over exports of rare earth, that these are more likely sort of attempts to strengthen each side's negotiating position ahead of the talks we're expecting between Presidents Xi and Trump at APEC at the end of this month, as opposed to some sign that this relationship is going to deteriorate in a way that we had not expected. And so I think it says to the Chinese, hey, get ready to bargain. Let's make a deal.
All right, that was our Bloomberg executive editor, John Liu, in Beijing there. And let's shift from US-China trade talks to talks between also Washington and Seoul now, because South Korean officials have returned home. That's after tariff negotiations in the US. The presidential policy chief, Kim Yong-bum, told reporters substantial progress was made over most key issues. Seoul's looking to finalize its $350 billion investment pledge in the US. Let's get more perspective now with Tami Overby, former president of the US-Korea Business Council and partner at DGA Group as well. So, Tami, thanks so much for your time this morning, and we can get started with those trade talks and this prospect, perhaps. Do you think we see a deal before we get to the APEC summit later this month?
I think we're going to make significant progress before the APEC meeting, but I think a deal would likely be announced by President Trump and President Lee at the APEC meeting. So I don't expect an announcement before the two leaders meet.
And there's been a lot of different sticking points around this, including the size of the investment pledge, the way that investment pledge as well would be financed. How do you see that playing out? Because that has been a key sticking point in these talks.
You're absolutely right. President Trump made the announcement that the Koreans had agreed to a $350 billion investment deal up front. The Korean understanding of that was a bit different. They were planning on loans and guarantees as funding mechanisms. But I also think that $350 billion would be the equivalent of over 80% of Korea's current foreign exchange reserves. And as somebody who lived in Seoul when they had their last major foreign exchange crisis in 1997-98, I remember how difficult that was for every Korean, and I'm sure the officials will do anything to prevent that, which is why I think they're not crazy about the idea of $350 billion up front in cash.
Does the United States and President Trump, do they understand the difference between South Korea and Japan? Because they're trying to apply the same deal that they had with Japan on a much smaller economy.
You're absolutely right, Shery. And for example, the Japanese foreign exchange is 3 times the Korean level. And I think the expectation, and the Korean government officials have done an excellent job explaining the differences. And I think after last week, more of the U.S. officials have a much better understanding of the differences between the Korean and Japanese economies.
How much of that impact from the humiliating raid over immigration by ICE on the Georgia plant has been really fixed since then? I mean, we haven't heard any major updates when it comes to the visa system in the U.S. to help Korean companies.
They have set up a joint visa working group, and that working group has met. But as far as fully resolving the visa issues, I think it's still in process. But you're absolutely right that Korean executives who have major investments going on in the U.S. right now, I think many of them are waiting to see what's going to happen. I'm not sure if you were aware, but 5 major Korean chairmen played golf with President Trump yesterday at Mar-a-Lago at the invitation of the SoftBank chairman, Masayoshi Son. And I'm sure that was one of the issues that was discussed during that full-day golf outing.
Do you see those ICE raids then having any sort of lasting impact on the appetite for Korea's business investment in the U.S.?
I don't think it'll have a permanent impact, although I do think it was shocking, totally unexpected, and to see the videos of hardworking, rule-following Koreans handcuffed and shackled. Those videos played all over the world. But the investment environment in the U.S. overall is good. The U.S. is the largest market in the world. The Koreans want to be near this market and participating in it. So I think we'll get past this.
What are the biggest hurdles then, do you think, aside from the size of the pledge, how the pledge will be financed? What else are you watching in these talks?
Well, I think the investment pledge seems to be the biggest thing. I think also seeing how will Korea be given any credit for the fact that they are a free trade agreement partner? Korean and U.S. auto tariffs were zero before President Trump initiated his reciprocal tariffs. And right now, Korea is still paying 25% tariffs, whereas Japanese and European automakers are only paying 15% because they've reached a deal. So this deal is really important to South Korea.
Yeah, but even if they get the deal and they get that to 15%, they would still lose out because before, as you said, they had an FTA and then they had the advantage over the Japanese who were paying more than 2% at that time pre-agreements. But as you mentioned, we know that the South Koreans really need this deal. How much does Washington need this deal with South Korea?
That's a great question, and I think they do need a deal. It's been a while since they've really announced, and I know they're talking to the Indonesians, the Malaysians, the Indians. They've got several deals in train, but the South Korean one is an important one. And again, I believe a lot of progress has been made, and we're going to have good news soon, I hope.
And what is next from here? Because even if you get the trade agreement, we have seen several times Washington coming out and rearranging already existing trade agreements. I mean, remember the FTA, the course FTA was also a rework of a previous agreement as well. So what sort of incentive do these countries have to make these agreements with the United States that can be overhauled in no time?
Well, and you make an excellent point. The South Koreans are very familiar with the U.S. Demanding renegotiations. The Chorus Free Trade Agreement that is currently in force has been renegotiated at least 3 times. So they are used to the U.S. coming back and asking for more. But I do think that South Korea recognizes the importance of the U.S. market. We are also their security guarantor. We provide the security umbrella for them. So I think it's important for the South Koreans that we get this deal done. And again, they will continue to urge the U.S. to honor the agreements. After this deal is done, and I will be very interested in the text, assuming we get some text out of this, how are other 232 sectorial agreements going to be treated? We're still waiting for semiconductors, pharmaceutical 232s, and both of those are also major products, exports from South Korea.
Tami, Overby, really good to have you with us, former president of the U.S. Korea Business Council and partner at DGA Group. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. This is the latest from the corporate front. India's ICICI Bank posted better than expected earnings, driven by healthy loan growth, even as margins remained under pressure. Net income rose 5.2% to $1.4 billion in the third quarter, beating estimates. The bank expects loan book growth to improve in the second half of the year, supported by an acceleration in retail lending. Emirates NBD Bank is set to invest up to $3 billion in India's RBL Bank. According to an exchange filing, the Dubai-based lender will acquire about 60% of RBL once the deal is complete and receive up to 959 million new shares at 280 rupees each. The investment reflects a broader trend of growing overseas interests in India's financial services sector. This is Bloomberg.
You're watching the Asia trade this morning, and we are just taking a look at what's happening in the commodities space because silver and gold have really been in the spotlight. It's been very much a record run for both of those assets, but has sort of been tempered actually on Friday because we had a bit of signs of easing of tensions between the US and China after President Trump spoke in an interview and said that the threat to levy additional tariffs on China wouldn't be sustainable. So that led to a retreat in both of those. Brent crude, it's actually actually a very different story, because it's been 3 straight weeks of losses for oil, and that's really these concerns that there's a supply glut continuing to form, and now maybe we're really heading into that territory. So prices could be set to further retreat from here. But let's shift now, because we do have Australian Prime Minister Anthony Albanese expected to meet President Trump on Monday in Washington. That's with rare earth minerals and the AUKUS security pact on the agenda. Paul Allen joins us now with more. So, Paul, it's been a trip very much a long time in the making, but what sorts of announcements could we expect from it?
Yeah, let's start with the rare earths announcement. There's been a lot of speculation in local media about what might be coming because, of course, Australia has enormous rare earths reserves, depending on how you measure them, either the largest or the second largest. But there's certainly no shortage of it. The issue is that most of it just gets exported as ore, and most of it gets exported to ore as China, besides a few other locations as well. So there's been a lot of discussion around how to potentially address this. This could be one of the announceables that we have come out of this meeting between President Trump and Anthony Albanese, because of course it's a tremendously desirable for the US to break China's grip on global rare earth supply, particularly considering some of the news flow we've had recently. Linked to that is also the AUKUS pact, because of course this is a deal between the United States, the United Kingdom and Australia to build up the US shipbuilding capability and also develop a new class of nuclear-powered submarines. Now, each one of these submarines would require 4 tons of rare earths. So those two things, AUKUS and the Rare Earths Pact, are pretty closely linked. Now, of course, the US is currently undertaking a review of the AUKUS Pact. That's created some nervousness in Australia as well. That review is being led by Albridge Colby, who is a notable AUKUS skeptic. Now, the UK Premier Keir Starmer has said, look, nothing to see here. When he took power, he also conducted a review. So UK saying this is a perfectly normal thing to happen. But Australia's already got some skin in the game here, having committed more than $1 billion already in down payments, and the intention being that Australia would receive 3 to 5 used Virginia-class nuclear submarines to replace its aging Collins fleet. So if this deal falls through, it's going to leave Australia with a submarine capability gap. So plenty of motivation here for Anthony Albanese to win some assurances there. Now, in the lead up to this meeting, the Deputy Prime Minister, Richard Marles, was in the US in August. He met with J.D. Vance, also Pete Hegseth and Marco Rubio. That was a very good meeting. He said they shared only positive words about AUKUS. So the expectation is, the hope, is we're going to get some good news after this meeting on Monday.
Yeah, the meeting that was, as Belle alluded to earlier, long time in the making. What took so long?
Well, it was meant to happen back in June on the sidelines of the G7, but of course President Trump left that meeting early to go and deal with an escalating situation in the Middle East. But yeah, you're quite right. It was been nearly a year now since President Trump was elected. Anthony Albanese got re-elected back in May, and still no meeting. The two did meet very briefly on the sidelines of the UN General Assembly and managed to get a selfie, but that was about it. But Prime Minister Albanese's copped a little bit of criticism back home in Australia for the delay here, particularly from the opposition Liberal Party, who says it should have happened sooner. But the opposition leader, Susan Ley, saying, well, look, at least we hope that something good is going to come out of this. Anthony Albanese, for his part, said he's looking forward to a constructive meeting to consolidate and strengthen the relationship. But a key baseline here for success is basically going to be no fireworks, no surprises. And there's still a lot of hurt and confusion in Australia about the 10% baseline tariff that the country's exports face, because, of course, Australia is one of those countries that runs a rare trade deficit with the US, and that imports more from the United States than it exports to the United States. So a lot of confusion on that front. Of course, a lot of confusion around the pharmaceutical tariffs, which have hurt big companies like CSL, even though they have a lot of manufacturing capability in the US. So it's going to be interesting to see if these sorts of concerns even get raised at the risk of not really wanting to have a conflict and making sure this meeting goes well.
Yeah, the baseline for a lot of leaders meeting with President Trump seemed to be, as you said, no surprises, no fireworks. Paul Allen there joining us from Sydney with the latest on that Albanese Trump meeting. And the other stories that we're following at the moment, the U.S. has formally imposed 25% tariffs on imported medium and heavy-duty trucks and parts, along with a 10% duty on buses. The directive prolongs the key tariff reprieve for automakers that manufacture and sell finished cars within the U.S. Meanwhile, India says it's making solid progress in trade negotiations with Washington, with both sides narrowing their differences on trade-related matters. President Trump has accused Colombian President Gustavo Petro of being an illegal drug leader and says the U.S. will halt all aid to the country. Trump wrote on Truth Social that drug trafficking has become Colombia's biggest business and Petro does nothing to stop it. The announcement follows Trump's September decision to decertify Colombia as a partner in fighting narcotics. Petro hit back, saying Trump is being misled by advisors. A former Taiwan lawmaker who's called for closer ties with China has won the race to become leader of the island's biggest opposition party. Chen Li-wen won with just over half of all votes and will be the third woman to lead the KMT. Chinese President Xi Jinping congratulated Chen on Sunday. The party is Beijing's preferred negotiating partner because it favors eventual unification with China. The Louvre was shut on Sunday after several pieces of jewelry were stolen in a daring daylight robbery. Several individuals are suspected of using power tools to cut through windows and a furniture elevator to enter the museum. The thieves broke into the Apollon Gallery, which houses the French crown jewels, stealing 8 objects, including a tiara, necklaces, and earrings. One piece of jewelry was recovered during their escape. Hong Kong police have confirmed 2 people have died after a cargo aircraft operated for Emirates airline skidded into the sea after landing at Hong Kong International Airport early Monday morning. The 4 crew members on the plane from Dubai were rescued and taken to the hospital. Hong Kong's airport is one of the busiest in Asia, and one of its 3 runways has been temporarily closed.
Let's take a look at what's happening in futures this morning here, because we are half an hour into the trading session so far for the ASX 200. Looking ahead as well to the opens in Japan and Korea, you can see the Nikkei looking to have a very solid catch-up play. S&P 500 futures, again, they're just fraction in the green here, but we did end the week higher because the main theme that investors seem to be reacting to is these signals that the US-China tensions are perhaps de-escalating slightly. That's after President Trump said that higher tariffs that he threatened to impose on China wouldn't be sustainable. So that very much played into the dynamics. And we've been hearing from strategists like Carl Water, for instance, from Capital.com, saying that markets are pricing in that things will de-escalate. But it has been quite choppy trading over the last few weeks as well. And on that point, Charles Schwab CEO says retail traders are eager to engage, or trade rather, when there's more volatility, something that's become more common since President Trump returned to office. Speaking with Bloomberg, Rick Wurster also shared his concerns about the U.S. economy.
The economy seems to be in fine health. We'll keep a close eye on it. The thing that makes me perhaps the most nervous is there's not a lot of hiring at the moment. There's not a lot of layoffs either. But if there were to be layoffs, there's not enough hiring to offset that. So I think that would be something that, if that were to happen, that could create some weakness in employment, and that would spill over likely into markets.
Are your clients taking on a lot of risk in that? You mentioned concentrated positions, but are they borrowing money to get into those positions and to continue building on those positions?
I think clients are trying to be thoughtful about where they invest and how they make money. We have seen our margin loans grow to an all-time record, around $97 billion at the end of the quarter. But we have to put that in proportion to the $11.6 trillion that our clients hold. So it's less than 1% of their assets. So I wouldn't say they're overextended, but they always want to maximize their wealth, and they're looking to take advantage of opportunities as they see them.
As volatility increases, like we've seen this week, are they trading more? Are they engaging more? Or are they backing off in those instances?
You know, our clients trade more when there's more volatility, and they tend to be somewhat counter-cyclical. I would say that last few weeks they've been buying dips and selling rips. And so we do see on days like yesterday and these more volatile days we've seen in the last week or two, we see elevated level of trading.
Long term, where's your growth going to come from for the company?
we have a tremendous growth opportunity in a number of fronts. Number one, we serve 16,000 advisors, and we're the number one supporter of independent advisors in our country. We expect that to be a really robust growth market because of the bull market for convenience and the desire for clients to have a fiduciary help them in their financial life. So that's really been a growth market, and I expect to continue to be. On the retail side, we're actually leaning into an old story, which is having physical branches and real relationships with people, because we find when we do that, that we have stronger client outcomes, greater client satisfaction. When we have a personalized relationship with a client, their satisfaction score goes up 10 points, and they do a lot more business with us. They bring about twice the amount of net new assets to us. So we're leaning into relationships. Where
are those branches coming up regionally? Where's the biggest concentration?
You know, we did a quantitative analysis of where our clients were and where our branches were. And the places where we were underpenetrated were Florida, Texas, and some parts of the West Coast. So we're moving to where the wealth sits and where we have an opportunity to serve them. We also have lots of growth opportunity ahead in things like alternatives. We're going to launch crypto in the first half of next year. So we're winning with our core client and expanding into other areas, and I couldn't be more excited about it.
Schwab CEO Rick Wurster speaking with Bloomberg's Scarlett Fu and Romain Bostic there. We have more ahead on the Asia trade. This is Bloomberg. We could be seeing a positive day for Japanese equities. Futures looking like this, pointing to the upside of more than 1% at the moment. And of course, this after we saw the Topix banks seeing its biggest drop this month last Friday. And we have seen some recovery when it comes to regional banks and the regional bank index in the U.S. and some calm returning to the markets. Also, we're headed towards, of course, a parliamentary vote when it comes to the next prime minister. Japan's Ishin opposition party working out the details of a potential agreement with the ruling LDP for a possible policy alliance that may be finalized as soon as Monday. Of course, a key question of what happens to that vote when it comes to determining the next prime minister. Let's bring in Bloomberg economics and government reporter Yoshiaki Nohara. Yoshi, does this mean that perhaps Takaichi has more of a chance to become the first female prime minister of Japan?
Right. I think there's a strong, almost a guaranteed chance now that she's going to be the first prime minister for Japan tomorrow.
So what does this mean in terms of forming the cabinet and what's next?
Right. So there's already reports that who is going to be, on the cabinet, and it's indicating so far that, she's going to maintain her expansionary stance on monetary and fiscal policies. But you have to remember that the speed is going to be a challenging element for her because it's a still minority government, so she has to work with many other smaller parties to get things done.
What does that mean then for policy measures and markets as well?
Right. So, what I said earlier is that the speed, if the market's expecting this kind of, major economic stimulus in terms of the size, the market may be disappointed because, there's not much, urgency for the economy in the need of such a huge stimulus. But at the same time, she has promised that she would do something for the economy. And we are expecting to see a contraction in the economy in the third quarter. So that may give her a little bit reason to go big on the economic stimulus package.
Bloomberg economics and government reporter Yoshiaki Nohara here with the latest on what to expect from that parliamentary vote and what will that mean for the broader Japanese markets and economy. In fact, let's discuss all of this with Nicholas Smith, a Japan strategist at CLSA, joining me here in the Tokyo studio as well. Nick, always good to see you. What does this mean? Japan's Ishin Party and LDP coming together. Does it change the policy direction and the implications for the markets, or are we sort of broadly on the same page?
Surely, from the point of view of market, it just strengthens the position that Komeito had always been something of a sea anchor on what they were trying to do. The two, Komeito had been a serial turncoat. It hadn't supported them on a lot of the things the LDP was trying to do. So the advantages of taking in Ishin is it's bigger and it's more aligned. So whereas Cormetor had 24 seats, the Ishin's got 37 seats. It takes them pretty much to the 233 seats they need for a majority. Not quite, but they'll, I'd not have much trouble getting the support of other parties to push things through now.
When you say those two parties are now more aligned, does that mean that we could see a doubling down of the Takaichi trades, that her points of view become more relevant now to the markets? Weaker yen, BOJ delaying perhaps rate hikes, a lot of the trades that we've seen so far.
I'm not convinced that the government has power to control the Bank of Japan. I mean, obviously, it got its independence from the Bank of Japan law of 1997. But on top of that, the time when you get to influence a central bank is when you're changing the governor or the chair. And so that's an issue for the US at the moment because Powell goes out in May. It's not an issue for Ueda because he's got 2.5 years more to run. So I think that he may well assert himself. We have a problem in Japan with the cost of living crisis. He absolutely needs to do that. It is strange that the politicians have failed to see. They've talked about giving tax cuts, which would certainly irritate the Ministry of Finance, and they haven't tumbled to the idea that actually a very large part of the inflation we have here is imported inflation, and all you need to do is hike.
The fact that you bring up the Federal Reserve and the fact that they are going to see these changes at the FOMC, is that does that give you an indication that no matter what happens, because of what the Fed is doing, we might see more strengthening of the Japanese yen, because at the same time we're just going in opposite directions?
So with the Fed, of course, President Trump is looking for a person that he can depend on to cut more. And, of course, the Federal Reserve moves in bigger steps than the Bank of Japan does. So they're more important in all of this, but I think the Bank of Japan will be wanting to raise rates. So I think people are getting worried about that and getting overexcited by the politics. But the situation on the ground is a serious cost of living crisis that's been holding back consumption in Japan.
So we're taking a look, though, at futures today, and we can see that we're setting up for a pretty solid trade at the open here, maybe gains of around 2%. So we could be back to testing all-time highs. Do you see that just as being a knee-jerk reaction then?
What markets like is certainty, and I think there'll be a lot more clarity in markets once the LDP has ejected the Cormetor and joined up with Ishin, who they agree more with. And then I think Ishin is associated with wanting to make Osaka the sort of sub-vice capital city. And therefore people are talking about, well, that presumably means more construction, so they're looking at Osaka-based construction companies. They're also talking about rail. Whether or not you agree with that, the market likes it. So some of the Osaka rail stocks. And I think that there's a lot more clarity on the two ideas of nuclear and of defence. So I think whereas Cormetor always wanted to hold back on defence spending, Ishin is much more behind that. So I think defence stocks will be quite liking that. I mean, of course, some of them have had one heck of a move. And then nuclear restarts. Japan absolutely needs nuclear restarts. It can't spend a dozen years spending to upgrade its nuclear plants and not switch them on. So I think that'll accelerate from here.
What about the also trade talks and this prospect we see further trade talks between the US and Japan? If President Trump makes a stop later this week, will that be also something that has an impact on market sentiment, do you see?
I see Takaichi being more forthright about things than beleaguered Ishiba was. So I think that it'll be much more of, well, what's the quid pro quo for what you're asking for? I think that the trade talks are pretty much done, and you can't particularly like a 15% import tariff, but the Japanese can probably live with that.
Given where we're headed with political changes, not to mention, of course, the trade negotiations, that they seem to be done with, but at the same time, you never know with President Trump. What are we going to see in terms of volatility in the JGB space? Of course, we've seen a lot of movement in the long end.
Well, obviously we've had a big pickup in the ultra-long end, and that's been a global move, but it's also concerns about increased inflation in Japan. So we had a drop on the short end and an increase in the long because people are saying, I'm worried that they won't continue with the policy moves. I think that they probably will continue with the policy moves, and I think that that'll rein in inflation a little bit, which will mean that the ultra-long end will calm down a bit.
How consequential are JGB moves now to global markets?
I think ultimately the concern is that Japan, there's not only the yen carry trade, there's also the vast amount of Japanese money overseas. So the net international investment position is what, best part of $4 trillion, whereas the carry trade, well, BIS says $250 billion. I think more likely, plenty of leverage, it's probably about twice that. But those two together, as soon as the yen starts to strengthen, then people will be worrying about the yen carry trade and then about repatriation of Japanese markets, Japanese money. And obviously, ultimately, what that means is worry about some of the more fragile markets out there. So within bond markets, say Europe, perhaps, the French bond market, and then a lot of stocks that had moved up too far, too fast. There'll be questions about them.
Nicholas Smith, good to have you in the Tokyo studio as always, Japan strategist at CLSA, and of course you can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. Subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. We're headed towards the Korean market opens as the KOSPI is now at a record high. We're talking about foreign fund inflows continuing to extend the rally in the Korean market. Year to date, gains of more than 56%. The previous best year was in 2005 with a gain of 54%. So if we stay at these levels, we're going to see a record year for Korean stocks. Of course, a lot of optimism over that potential U.S. trade deal being finally finalized. The market opens in Seoul and Tokyo. Our next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and following every commentary when it comes to those trade headlines. Bell, of course, we're following potentially the U.S. South Korea finalizing a deal and any commentary around the ongoing negotiations with China. Overnight, though, in the Friday session, we actually saw on Wall Street some relief over the credit angst from regional banks as well.
Yeah, that's right. We had some preliminary numbers coming out for some of the smaller regional lenders, and it sort of put some of those credit risk stories or those concerns to bed. But of course, you mentioned China. The other big story we're tracking today is the data dump. We've got GDP plus monthly activity figures that are due later this hour or in the next hour.
Yeah, and of course, we do have the fourth plenum also getting started. So, yes, you said it, Bell. Plenty to watch over in China, as well as the biggest political meeting of this year gets underway. But take a look at how Japan is coming online, because we had seen the Topics Bank Index seeing its worst loss in about a month or so. So we're seeing a little bit of a rebound in today's session with the Topics gaining almost 1.5% right there. We had seen the Japanese yen also strengthening in the U.S. session, but we're seeing losses against the greenback again towards that 151 level against the U.S. dollar. The 10-year yield holding at that 165 level. Of course, what we're following is also the political developments here in Japan as we head towards a parliamentary vote. We are hearing that Japan's Ishin party could be really aligning with the ruling Liberal Democratic Party, which boosts the chance of Sanae Takaichi becoming the first female prime minister here in the country. Take a look at how South Korea is coming online because the KOSPI has been on a tear. We're talking about 56% gains already year to date, which would make it the best year ever for the South Korean benchmark. The KOSPI gaining 0.7% and extending that rally to record highs. The Korean won unchanged at that 14.22 level, but we had seen a little bit of downside pressure against the U.S. dollar bill as we continue to follow those ongoing trade negotiations with the United States.
Yeah, but as you said there, the KOSPI is sitting at a record high this morning. Let's also take a look what's happening in the Treasury space because we've been watching those yields. We heard from the Carlyle CEO, Harvey Schwartz, last hour, and he says that, yes, credit risks are a concern for him, but he's still sort of downplayed that as well. And in the regional bank story, we had that. Also, one of the big factors and the key area to watch was any sorts of credit risks or credit cracks in the economy playing out. But we didn't really see that. And so off the back of that on Friday, we really did see that sort of relief rally. We had seen yields, for instance, retreating across the curve. Today, you're just seeing them fractionally higher at the front end there, you can see. But what else we're watching is what's happening in the commodity space, because this has also been one of the key themes. Again, on Friday, we had those credit risks sort of dissipating a little bit. We had President Trump as well going on into an interview saying that this threat of higher tariffs or even higher tariffs on China wouldn't be sustainable. And so that sort of de-escalation, or the way it was interpreted by traders, was sort of a de-escalation. Also played into the metals picture because you saw silver, for instance, retreating around 6% and gold there, just again, fractionally off those fresh record highs we hit last week. Oil has been another key theme to track because we're coming off a third straight weekly loss. It is the commodity, the concern here really is around a glut forming essentially in it, and that is also playing out the dynamic, Shery.
Yeah, I mean, you said it right. The IEA now predicting a flood of supplies next year, and that could be pretty record-breaking. We're talking about almost 4 million barrels a day next year. And we have seen, despite, of course, the concerns of oversupply, oil gaining ground in the previous session. But today, early in the Asian session, we're under a little bit of pressure. Let's discuss all of the market moves and bring in Fabien Yip, market analyst at IG International. Great to have you with us. So what will you be watching out for this week? Because as we mentioned earlier, we have plenty of data to digest coming from China, but also at the same time, all of these trade headlines as well.
That's right, Shery. A lot of things to watch out for this week. Today, it's going to be a very important day for China as we see the plenum kicking off in China. So it's going to be a 4-day session where we'll be hearing from the Chinese leaders talking about the social as well as the economical agenda for the next 5 years, so 2026 to 2030. We expect to see a lot of news around how they will be controlling the deflation problem in China, as well as developing the AI and tech advancement in China. So a lot of things to watch out for. Obviously, personal changes will also be an important topic that we'll be focusing for the meetings. The other important data in China on GDP as well as industrial production and retail sales will be out in just less than an hour's time. I think we'll be expecting a slowdown in GDP growth in the second half of the year. While the first half has been doing pretty well, we've seen that the numbers have exceeded the 5% target. We think that there will be a slowdown in the second half. And obviously outside of China, we see in Japan that there will be a lot of key developments on Takaichi's potential election at the lower house. So maybe we'll see a new prime minister in Japan being elected.
Staying with China first, though, Fabien, I mean, you said it, we do have plenty of data, and a lot of it could actually point to more weakness. But at the same time, an incredible rally in Chinese stocks. MSCI China headed for its best year since 2017 or so. Does that rally have legs, especially given the AI theme that you also mentioned?
Yeah, I think there's a lot of optimism being priced into the Chinese stock markets right now. But if you look at the corporate earnings, I think the numbers are quite pretty diverged, I would say. We're seeing roughly like a below 2% earnings growth in companies that are listed onshore. And if you compare that to the US, where we're seeing earnings growth of low teens, we do see a stark difference, and there could be a discrepancy between how the market is looking at potential growth in AI as well as biotechnology, but at the same time, the corporate earnings are yet to reflect that. So I would be a little bit cautious on that. And last week, an interesting observation as well, where we saw tech and AI stocks did pull back from their highs, and there was a sector rotation into SOE companies that did pretty well during the years before. So that could be an interesting trend to watch.
It does seem that markets, the sentiment is still pretty fragile because we've seen elevated volatility, for instance. What do you think that sets us up for in terms of the key risks that are facing traders as well?
Yeah, I think we did talk about a lot of trade headlines, so I think that's going to definitely still dominate the market sentiments. The other thing to watch is obviously how market is expecting rate cuts to come in quite aggressively, once in October and once in December. That has already been fully priced, and that has also been moving asset prices up, including stocks as well as things like gold and silver. So if we will be hearing, obviously, the CPI report later this week, if the reports come in a bit hotter than expected, or if we're even seeing a huge deterioration in the U.S. economy, this could derail stock markets and risk assets quite a lot. So that would be a key risk to watch as well.
Yeah, and of course, the US government shutdown has been blocking a lot of the key data to date. You mentioned Japanese markets before. What do you anticipate in terms of the market dynamics if we do get political clarity on that front as well?
Yeah, I think the market has already slightly been reflecting that earlier this morning in the yen. We did see that it held at the dollar yen held at a 150 level after a recovery of yen last week. With the clarity on Takaichi's premiership, I think stock markets will be poised to do pretty well this week, and the yen could weaken towards the 153 level. So those are some key levels that we're watching. But obviously, we need to watch out for risk on how the trades have been pretty concentrated right now in certain companies. So corporate governance is an interesting and important area to watch out for, where we think that it's important to be stock pickers instead of just buying the market.
Fabien, thanks so much for your time this morning. That was Fabien Yip, their market analyst at IG International. And just as we've been speaking, we've got an alert crossing the terminal here. President Trump is speaking with reporters aboard Air Force One. He has been traveling back from Palm Beach in Florida to the White House. We know he was in Florida over the weekend, golfing as well, reportedly with some business leaders, including from Japan, but also Korea. But aboard Air Force One, he's talking to reporters about the situation in Colombia, and he is saying that he will announce a tariff rate tomorrow for the country. So that's Monday, of course, in the US. But on that, for context, on that Colombia story, President Trump has accused the Colombian president, Gustavo Petro, of being an illegal drug leader, and says the U.S. will halt all aid to the country. Trump wrote on Truth Social that drug trafficking has become Colombia's biggest business, and Petro does nothing to stop it. The announcement follows Trump's September decision to decertify Colombia as a partner in fighting narcotics. Petro hit back, saying Trump is being misled by advisors.
And Belle, take a look at how Japanese banks are also trading at the moment. We have seen some relief when it came to U.S. banks on the Friday session, with some regional lenders gaining ground on better than expected earnings. And you can see the banks across Japan also following the rally higher. We had seen the Topix Bank Index seeing its worst day in about a month on the Friday session as well. But with political uncertainty also easing a little bit, remember we do have the parliamentary vote on the next prime minister. We are now seeing broad upside across Japan. More ahead, this is Bloomberg.
You're watching the Asia trade this morning and taking a look at how Aussie assets are faring. So we are about 75 minutes into the session so far, and we're seeing stocks a bit under pressure. So we're not actually following the trend from Wall Street, because Wall Street session on Friday closed higher after we had signs of de-escalation in the trade relationship between the US and China. But again, Aussie assets under pressure so far. You're seeing the ASX 200 a 0.25% to the downside, but being led by materials, energy, utilities. We do have some sectors in the green, but again, the overwhelming trend is to the downside. Aussie dollar there holding fairly steady, and you're seeing yields just notching up slightly as well, Shery.
Yeah, and other stories that we're following at the moment, Belle, Hong Kong police have confirmed 2 people have died after a cargo aircraft operated for Emirates Airlines skidded into the sea after landing at Hong Kong International Airport early Monday morning. The 4 crew members on the plane from Dubai were rescued and taken to the hospital. Hong Kong's airport is one of the busiest in Asia, and one of its 3 runways has been temporarily closed. The Louvre was shut on Sunday after several pieces of jewelry were stolen in a daring daylight robbery. Several individuals are suspected of using power tools to cut through windows and the furniture elevator to enter the museum. The thieves broke into the Apollon Gallery, which houses a French crown jewel, stealing 8 objects, including a tiara, necklaces, and earrings. 1 piece of jewelry was recovered during their escape. Take a look at how European futures are trading at the moment. We are, of course, watching those French bonds very closely, as we had seen the latest report from the S&P Global Ratings company downgrading France to A+, citing the country's budget uncertainty as elevated despite the submission of a 2025 draft budget. This could potentially force some funds with strict investment criteria to sell the country's bonds. And we have seen, of course, French assets under pressure on those budget concerns. And you can see the euro holding steady at that 116 level after we saw a little bit of those moves being led by the dollar, which saw the worst week since August as well. We have more ahead. This is Bloomberg.
Israel's launched strikes against Hamas in Gaza and reportedly suspended all aid shipments. This comes after accusing the group of an ambush that left 2 Israeli soldiers dead. Israel's blamed Hamas for breaching the ceasefire agreement brokered by the US, as President Trump urges Hamas to disarm.
We're going to find out. So it's not a hard timeline, but it's a line in my own mind. And at a certain point, if they don't do what they're supposed to do, then we'll have to do it for them.
Let's bring in Bloomberg editor Michael Heath. So, Michael, thanks for joining us this morning. It does seem that just really in the very early days of this peace accord, it's already unraveling. But in the early days of a ceasefire as well, is this sort of par for the course, I guess, for the dynamics for it still to be worked or ironed out?
Yeah, Annabelle, I mean, it's probably not terribly surprising that we're in this situation, but the problem is that the first part of the accord, the releasing of the live Israeli hostages, the releasing of the Palestinian prisoners in response, that was sort of the simple part where everyone knew where they stood. We were almost immediately after that, saw Hamas is also due to release dead hostages. Now, they sort of are saying that they can't release all of them because some of them are buried under rubble. And Israeli intelligence has basically confirmed this as well. So they knew that was the case. But this intermittent shooting, the Hamas cracking down on as it retakes parts of Gaza, cracking down on Palestinians. I mean, it's sort of expected. The problem is that it's very, very hard to get to the next stage because it requires Hamas to disarm. It requires them to sort of give up power. It's not clear who they're going to do that to. And on Israel's side, it still sees militant threats, etc. And it's very much, its decision to withdraw was very much about getting those hostages out. Whether they feel that they've got everything done or not is unclear. What's positive here in a way is that it has been internationalised. So you've sort of had the US, it had sort of said to Hamas that it will restrain Israel. And similarly, the Arab states are trying to do the same with Hamas. So that's probably the positive thing, that they can exert some pressure there. But yeah, the portents aren't good because it's very vague what's supposed to happen from here on.
And Mike, let's turn to the Ukraine-Russia conflict as well. Any chance at this point that we could see some peace negotiations? Where are we at?
Yeah, I mean, Shery, it's really, really difficult. I mean, President Trump in recent weeks had been saying all the sort of things that people in Europe, people in Ukraine wanted to hear. He had one phone call last week with President Putin at Russia's initiation, and he's sort of back to repeating a lot of the talking points you hear from Russia. There's been quite a bit of reporting of what sort of came out of the discussions between them, and Trump saying Ukraine has to give up more, and sort of this idea of supporting the aggressor here, which left Ukraine pretty deflated. Ukraine's not getting any Tomahawk missiles to strike into Russia, to threaten Russia and bring it to the table. So again, it sort of sounds like President Trump on President Putin's side there. So, I mean, Ukraine is not going to buckle to that. Whether Russia would offer something new, it's hard to see. I mean, there's not a lot of movement on the front lines. As I've said before, this is like World War I here. So it's really just a matter of who wants to give. I mean, Russia says this is apparently told President Trump this is a special operation. We're not even at war. We can destroy Ukraine. But when you're taking supplies from North Korea, it sort of undermines that whole fact. So I wouldn't be terribly optimistic about it at this stage.
Bloomberg's Michael Heath there with the latest on the geopolitical front. We're following Japanese assets higher. Every sector on the Nikkei in the green right now. Communication and healthcare stocks leading those gains. We had seen some losses in the previous session, but the Japanese yen at the moment losing ground against the U.S. dollar towards that 151 level per greenback. And this, of course, coming at a time when we're headed towards a Tuesday parliamentary vote to elect the next prime minister. Japan's Ishin opposition party considering joining forces with the ruling LDP. For more on Japan's shifting political dynamics, let's bring in Bloomberg economics and government reporter Yoshiaki Nohara. Yoshiaki, so if we see Ishin and LDP coming together, does this mean that Sanae Takaichi has a higher chance of becoming the next PM?
Right. Well, that is likely to the most, and probably the certain outcome, this week we're going to see, because Ishin is likely to strike a deal with the LDP, but at the same time, it ended with talks with other opposition parties. So that means there's no time for opposition parties to pick a single candidate to challenge Takaichi.
So what does this mean in terms of the timeline of how the new government gets formed? Because, of course, we do have a very busy week next week as well with the visit of President Trump.
Well, that is a good question. The first task that Takaichi has to do is that form the cabinet this week. And she has to make sure that she has a strong names, faces in key positions so that she can show to the public she is getting on the task of helping people with inflation and other urgent matters as soon as possible. So then she can switch gears to external matters next week.
When it comes to Ishin and LDP aligning together, does this mean any changes in terms of policy of perhaps some of the economic measures that Senator Takaichi wants?
I do not think there's going to be a major change in terms of the direction of the policy making, because she's going to prefer the more spending on the fiscal front, and also at least advocate to slow down in the BOJ's policy normalization at this point. But you have to keep in mind there's been a lot of expectations have been rising in the markets about what she's going to do. So the challenge for her now is that whether she can meet those expectations or not.
That was our Bloomberg economics and government reporter Yoshiaki Nohara there. And let's shift now, because Australian Prime Minister Anthony Albanese is expected to meet President Trump on Monday in Washington with rare earth minerals and the AUKUS security pact on the agenda. Bloomberg's Paul Allen joins us now. So, Paul, in terms of the announcements, what can we expect, do you think?
Yeah, there's been a lot of speculation about that we will hear of some sort of a deal between Australia and the US regards critical minerals, because while Australia has some of the world's largest reserves of these rare earths, very little of it gets processed here. Most of it goes offshore, and most of that goes to China. So obviously a strong motivation for the US here to break that grip that China has on global rare earth supply. And there's crossover here with the AUKUS pact as well, because the design of new nuclear submarines, every new nuclear submarine requires about 4 tons of critical minerals, so that would certainly assist with that project as well. There seems to be a little bit of hesitation in the US regards AUKUS. There is a review being conducted by Elbridge Colby, so Prime Minister Albanese will be seeking some reassurances around that, because unless this goes ahead, there's going to be a submarine gap for Australia as its old Collins-class submarines get retired.
What took so long for the two sides to meet?
Yeah, it's a good question, and it's been asked quite a lot here in Australia as well, not the least of which by the opposition, because it's been nearly a year since President Trump was elected. It was back in May since Anthony Albanese won re-election as well. There was a meeting meant to take place in June on the sidelines of the G7, but President Trump pulled out of that due to developments in the Middle East. The two of them did get a selfie at the UN General Assembly, but this is the first opportunity for a sit-down face-to-face chat. So finally, seems to be the sense here in Australia. The key now is to make sure that it doesn't go off without a hitch, that it's more friendly than fireworks. And of course, Australia still does have 10% tariffs in place, the baseline with the US, despite running a rare trade deficit with the US. So it'll be interesting to see if that gets brought up at the risk of the greater goal of just making sure this meeting proceeds smoothly.
Paul, that was Paul Allen there in Sydney. And just to note as well, we are seeing rare earth stocks in Australia significantly falling this morning. So perhaps one of the reasons as well the ASX 200 is in the red. But another stock that is climbing today is DroneShield. Now, this is a company that essentially produces anti-drone technology. It has seen a huge run-up over the course of this year, around 500%. One of the best performing defence names. Just had earnings out early this morning. We saw quarterly revenue soaring. It's got a string of contracts from several nations as well, this company. So DroneShield, we're going to be joined by the CEO, Oleg Vornik, joining us just in a few minutes from now to unpack those numbers and the outlook for the business as well. So we'll have more ahead on the Asia trade. This is Bloomberg. Well, China's going to be releasing a slew of economic data later Monday, which could show its third quarter GDP growing at the slowest pace in a year. September's industrial production and retail sales are also expected to confirm slowing momentum. Michelle Lam is the Greater China economist at SocGen, and she joins us now. So, Michelle, we were just talking there about the significance of retail sales and how much you're going to be watching those, especially because we've seen a lot of government support for retail sector in particular this year. What are you anticipating?
So I'm expecting the moderation. Well, we've seen what's happening to the property sector. The prices are still falling. The consumer confidence is still pretty weak. Even though we are seeing some rally in the stock market, I don't think that's going to generate much positive wealth effect to the households because housing is still the major asset. So I think retail sales is still going to be pretty soft and consistent with what we've been seeing in the National Day holiday spending data.
Yeah, it's been sort of one of the key themes that we saw out of the Golden Week data was that, you know, the spending wasn't really that strong, even though you had such a significant run up into that period as well in terms of the equity market. So that point on the wealth effect or that transfer not really coming through. What then do you think in terms of the policy response? Do you see a broadening of measures to support the retail sector?
I think right now we haven't seen a lot of discussions of it. I mean, we're already in the fourth quarter, and based on our current GDP forecast for the whole year, it's going to be 4.8%. Actually, just on Friday, we see that the government has announced some local government bond issuance of $500 billion. And I think together with the structural policy tools that they announced in the end of September, I think altogether it's already $1 trillion of money going to be to the infrastructure investments. And I think that should provide some support to allow them to meet the whole year GDP target. But in terms of the consumption momentum, I mean, we still need to really see whether the property prices are stabilizing, and more crucially, the labor market, based on the confidence data that we're seeing, is still quite soft.
What about the industrial production figures as well? Because that's also been a story around the anti-involution trend and all the campaign, and was that also having any sort of bearing on deflation in that sector?
I think the industrial production, if we look at the recent data and also the PMI, I think we're still on the safe side because exports are still doing quite well. We've already got the data for September. It's actually surprising the markets to the upside. So I'm not too concerned about industrial production overall. I think China's exports actually is quite competitive globally, especially what we're seeing in the new free sectors. The EVs, the batteries exports are still going strong, so I'm not too concerned about that. But what we're seeing, the impact from the anti-inflation campaign is really on the fixed asset investments. So I think for September, we're looking for the year-to-date expansion going to 0%. So which means that I think we're probably seeing some spillovers of a pullback of these investments in the manufacturing sector.
Is that going to be one of the pillars of some of the priorities that we may get from the fourth plenum? What are you watching?
So I think quite likely the government is still going to place a lot of emphasis on tech innovation, especially given what we are seeing in the U.S.-China tensions, I think, and also looking back at the progress that they've achieved over the last 5 years, the 14th five-year plan. I think policymakers would think that they've actually done pretty well in terms of achieving the tech innovation under the Made in China 2025 program. So I think they're just going to double down on that. We're going to see a lot of support in terms of the AI initiative, the low altitude economy, etc. and etc. But what I think I will be watching even more closely is if there's going to be a stronger emphasis on boosting consumption. I mean, there are a lot of initiatives that the government can do, I think, and most crucially, it's about really reforming the pension system. And if there's some mention of a consumption target, I think that would just give an even stronger indication that the government is really moving towards supporting consumption.
Of course, we're following also the latest trade headlines, especially when it comes with tensions with the United States around rare earths. We know that the curbs that Beijing wants to apply on rare earth critical minerals will have implications for global supply chains. Will it have implications for the domestic Chinese market and economy as well?
I think it depends on how the government is going to apply on these export controls. But right now, judging from the policy statements that the government is going to implement it, just based on if there's some concern about dual use, like including the military. So I think based on just like some normal applications, I don't think that's going to cause much disruptions to the rare earth trade. I think that's also not the intention of the Chinese government, or just to some extent trying to maybe raise the leverage ahead of the U.S.-China negotiations. So in terms of the domestic market implications, maybe in the short term we're going to see some firmer price pressures, but I don't think that's really going to cause disruptions in the global trade of rare earth if we don't see the tail risk of U.S.-China moving into a much major escalation on that front.
In terms of the GDP target as well of around 5%, are we on track to hit that, do you think? And if not, what sort of further support do you see to make that happen?
So the government's target is around 5%. So maybe if we have 4.9%, I remember there's actually a year that the GDP printed 4.9%. So actually they still kind of like meeting the GDP target. But as I mentioned, they've already announced some structural policy financing tools. They're also like going to issue more local government bonds under the existing debt holder. So adding all these together, I think the chance is increasing for them to hit the target this year.
Michelle Lam, Greater China economist at Societe Generale. Really good to have you with us. Of course, we discussed everything to do with the Chinese economy, including what's happening around the restrictions of rare earths and perhaps the implications that could have not only to the economy, but let's delve into the implications for the broader markets. Bloomberg Asia equities reporter Sang-Mi Cha joins us now to unpack what traders need to know to navigate such restrictions. Sang-Mi, of course, we're talking about Beijing and now controlling some 70% of the mining, near 90% of processing of rare earths. What does this mean for investors?
Yeah, so for the investors, they're looking at the companies, how they're going to plan out all this impact from the curbs. And exactly what they're trying to do is they're trying to look for some of the options, replacement per se, if they can actually come up with other technologies that can get rid of some of the use of these rare earths. Tesla, for instance, is doing that exactly. They have said that they're going to plan to not use a rare earth in their cars and in their robots as well. So these are some of the options that they're going for. But of course, they're looking at other countries that can actually provide these rare minerals. And some of these companies that have already been benefiting from these news are the Australian companies like MP Materials or Lynas. They have been seeing their share moves just skyrocket because of these moves. And we can also see that this is going to widely impact the semiconductor sector. This is very significant when it comes to the production of these chips. And we're talking about companies like Applied Materials, Lam Research, or Tokyo Electron that really need these rare earth minerals. So these are the companies that will be widely affected as well. And of course, defense is another sector that Michelle just talked about. And that's because there are 900 pounds of rare earths that's carrying on the F-35 fighter jet that is produced by the Lockheed Martin. So that alone just signifies how important these materials are for weapons making.
Yeah, not just defence or chips. What about automakers and renewables as well? These are the sectors that are very reliant as well on the rare earths.
That's correct. So for the EVs, regardless whether it is an electric vehicle or it is gas-powered, both of the cars do need these rare earths. So Ford Motors or Hyundai and Kia all are going to be affected. And so they're actually also trying to look for other options. For instance, Korea Zinc is a company that has just rallied so much last week on the back of these news because they said they're going into rare earth mineral production, and they are actually diversifying their businesses. So we're seeing these different pockets of opportunities for the companies that actually want to source these rare materials. And so we're seeing those different moves in different sectors.
And really, this is so important for national priorities for countries around the world, right? We will see more insight into the priorities of China, given that we are headed to the fourth plenum. Is there any way to trade this?
Yes, so we've been trying to find out the ways to trade this. There are many interesting opportunities here. The fourth plenum indeed is the most important gathering of the top leaders of China this year, and they're going to lay out the 5-year plan for the next until throughout 2030. And here they're going to be focusing on tech and innovation that we have already been seeing a lot of moves there because Beijing has been urging local companies to move away from the use of NVIDIA chips and to go and look for the domestic options like Cambricon, and we've seen like Hua Hong or SMIC rallying all because of these moves precisely. And so any policies or announcements around the emphasis on innovation and tech would actually be a boost to some of these stocks that we have talked about. And of course, the outside that are also some of the anti-involution names. And by anti-involution, we're talking about really curbing that cutthroat competition inside China that Beijing has been trying to really tamp down. And we have normally been talking about EV names or the food delivery companies. But right now, some of the companies that are mentioned is actually solar and lithium. And that comes because the authorities have been saying that they have to curb the production and oversupply of these lithium names by halting some of the mining, mine productions and operations. So now that has been a boost to some of the solar and lithium stocks in China.
Tami Cha, Bloomberg Asia equities reporter there with the latest on what to watch in all of these moves that we're seeing in the markets. And it's really an update when it comes to Japanese equity markets today. We're talking about record highs, the best day in about 2 weeks. We have seen, of course, the Japanese yen weakening towards that 151 level against the U.S. dollar, despite some strength in the previous session. We're seeing banks rallying today ahead of after some relief coming from regional lenders in the U.S. session as well. We have the KOSPI holding on to barely some gains, but we're still talking about record highs for the South Korean stock market. We do have the Bank of Korea's rate decision this week. When it comes to the Australian stock market, under a little bit of pressure, we were talking about those rare earth stocks that we continue to watch, as Prime Minister Albanese is also expected to meet President Trump and talk about supply chain of rare earth materials. We do have Singapore and Malaysia away on holidays today. More ahead, this is Bloomberg.
You're watching the Asia trade this morning. We've got Aussie stocks under pressure across the board, but one stock that is moving to the upside is DroneShield this morning. We're seeing it moving higher after it had its results coming out, but you're taking a look there at that expansive rally year to date. You're talking about gains of more than 500%. It's a company that focuses on counter-drone technology, and as we just said, its earnings coming out early this morning, revenue of $60 million, but importantly, a 1,000% jump from the same period last year, according to that latest exchange filing. So let's get more perspective on the numbers, the outlook for the business as well with Oleg Vornik. He's CEO of DroneShield joining us. So Oleg, we can probably start with the technology of DroneShield. I think people are, of course, very familiar with how drones, the hardware drones, have been used extensively in the battlefields in Ukraine, for instance. But what is counter-drone technology and what is that use for it as well?
Counter-drone technology utilizes multiple types of tech, such as radio frequency, radars, cameras, and acoustics, all fused together, for the first step being detection and tracking of drone or multiple drones, like a swarm, and then it's followed by the defeat. So defeat can be, again, through a number of ways, like smart jamming, protocol manipulation, or even high-power microwave. So DroneShield develops a number of technologies as well as integrates a number of third-party technologies into comprehensive packages for our customers around the world.
And that technology is I mean, it's certainly benefiting from an increase in government spending, for instance. What were sort of the key takeaways from your numbers that you reported earlier today?
we're continuing to rapidly accelerate with our customer adoption. When we started 10 years ago, there was really no demand for counter-drone to speak of. Now, militaries, as well as increasingly civilian customers, are saying drones and nefarious activity are for real, but unfortunately we have really not much in counter-drone technology deployed. So for the last couple of years, since it's really came on radar of a lot of our customers since the start of Ukraine war, customers started to evaluate the counter-drone technologies and now moving into rapid adoption cycle. But we are still the very early days, but we're seeing those increased large purchases, which is showing through our quarterly results, which are continuing to get stronger every quarter.
Yeah, and as we said, a surge in revenue of 1,000% from the same period a year earlier that you had this morning. Where's most of the demand coming from right now? Is it in Europe, for instance?
Europe is by far the largest share of our sales. So today it's accounting for about 40% of our revenues. But we are present in about 50 countries around the world. So US continues to contribute. We have presence in Virginia, and we serve a number of defense, homeland security, law enforcement, and intelligence customers there. We're seeing quite strong demand from South America, where we're supporting government customers fighting drug cartels, and we're seeing quite a lot of demand in Asia Pacific, where a number of our customers are concerned about the rise of drones, Chinese drones, essentially all of China neighbors. So all of that is combining together into a very significant wave of interest.
How's commercial demand when it comes to other sectors other than defense, whether it's infrastructure or airports and just other areas that you're also working at?
We're seeing increasing amount of demand. It's a bit slower compared to defense, but especially airports and data centers, we expect to be a significant demand driver. In fact, a little bit earlier this month, we have unveiled our updated total addressable market estimates, where we believe that counter-drone is approximately US $60 billion total addressable market, and roughly half of that sits in the civilian space. And in addition to airports and data centers, you're looking at stadiums, energy infrastructure, public venues, corporates, and others. So because of that, we have earlier this year unveiled Century Civ, which is our dedicated offering towards the civilian sector, and we expect for that to really start driving our revenues over the next several years. But as it stands today, defense and intelligence are the vast majority of our revenue streams.
And we've seen, of course, your investments into R&D, a new facility in Adelaide as well. When it comes to potential new breakthroughs, what are you hoping to achieve, and what's your competitive edge against rivals?
Counter-drone is very much a game of cat and mouse against drone manufacturers themselves. If you looked at Chinese drone manufacturers especially, but also Russians and Iranians, maybe even 5 years ago, the game for drone manufacturers was about saying, how do we make drones that can fly the furthest, carry the most payload, see the furthest, do the best sense and avoid? And that is still the focus, but also increasingly we're seeing focus for drone manufacturers on how to avoid detection and defeat systems such as what DroneShield makes. Over the last 10 years, we have developed a number of technical and commercial differentiators which set us apart from our competitors, and we are the only public listed counter-drone company in the world. On the technical differentiators, we have a highly agile engineering team which we believe is the largest in the world at what it does, and as a result, through the last 10 years of work, our sensors can detect furthest, defeat furthest, have most accuracy and so on. And also we integrate the best-of-breed third-party equipment for our customers as well. About 5 years ago, we have realized that counter-drone is very much a data game, as increasing amount of drones means that you really need to move to artificial intelligence to be able to detect and defeat never-seen-before drones. But like with any AI, you really need to have very large, clean, well-tagged data sets. So we started collecting drone signal data from everywhere around the world. So we're talking Ukraine, States, South America, Australia, Europe, and so on. And so then we have data engineering teams to be able to clean and process the data. And now the 4,000 odd devices that we have deployed with customers' consent, a number of them can also send us the data back, which continues to make our products better with our quarterly AI-enabled SaaS updates to our customer set. So these are all of our technical differentiators. On the commercial front, we have developed a number of trusted relationships with end customers around the world. When you're talking about dealing with defense customers, it's not quite the same as working in the consumer space, meaning you have customers that share a lot of vulnerable information with you and you become their trusted vendor. And once you have that early mover advantage and you're well positioned with customers around the world, you're really well set, and it's pretty hard for somebody to shake you off.
Yeah, getting yourself embedded in those important supply chains. That's Oleg Vornik there, CEO of DroneShield, a defence tech company that's seen a more than 500% surge in Sydney so far this year. For more on DroneShield, you can tune into the upcoming episode of the Bloomberg Australia podcast. It delves into the biggest stories shaping the country's role in global business. So you can find it on Apple, Spotify, or Bloomberg.com.
And we do have breaking news on the Bloomberg right now. Rodrigo Paz has won Bolivia's presidential vote. You're watching live footage from the election headquarters of the senator that's been seen as more pro-business. His pledge to curb spending to address the economic crisis ongoing in Bolivia, and also promised to repair relations with Washington. Remember, Bolivian bonds has surged this past year, returning almost 40% among the top performers in emerging markets. Investors betting that the defeat of the ruling Mass Party would herald more business-friendly policies. So we'll be watching for reaction in the bond space, as we're now hearing the pro-business senator Rodrigo Paz has won Bolivia's presidential vote. Bolivia, one of the poorest countries in the Americas, has suffered from soaring inflation, fuel shortages, and a crippling debt load. We have more ahead. This is Bloomberg.
Taking a look at some rare earth stocks this morning in Australia, you are seeing mixed moves essentially, but has been, of course, the big story that investors are trying to grapple with, because you've got this prospect that China is going to be increasing export controls on rare earths, and these are materials that are used across a variety of different sectors, from semiconductor to defence, autos, really, really very widespread. And China, of course, as you said, Shery, controls 70% of the mining, near 90% of the processing as well. So the restrictions they place will have huge ramifications. But as you see there, quite mixed moves.
Yeah, no mixed moves when it comes to the Japanese market. Is broadly in the green right now. We're talking about every sector gaining ground. This as we head towards Tuesday's parliamentary vote to elect the next prime minister. The chances that Sanae Takaichi will become the country's first female leader have risen. And of course, we're following Chinese eco data out later today. Do watch out for GDP numbers expected to come in below 5%, given that we are expecting that activity data to continue to reflect a weak economy. You can see A50 futures closing to the upside of almost 1%. That's it from the Asia trade. The China show is next. This is Bloomberg.